Hey, Steve, Andy, how's your Tuesday?
Hello, Scott. That's good. Thank you. Hello, Andy.
Hey Steve, hello Scott, and hi everybody out there.
All right. Pleasantries aside, here we go. Another week. And boy, do they creep up quickly, don't they, Andy?
Yes, they do.
I don't know why. This is just my benchmark of how quickly the weeks fly by. Every week I say that. All right. Test drive. Hello, everybody. We're going to kind of, you know, take the trade of the week webinar, our normal formula, but we'll always be able to have questions and answers for people who are looking for that. But stay tuned. We'll get to that, giving out opinions and education. And Andy and I have been using Trade Ideas for about 15 years now, since the beginning, and we recognize it's a um, very in-depth program that has a lot of features, and sometimes it's not always easy to grasp all those features in one simple test drive 5-day period. So we recommend using the product for a month or so and letting us use the education to can't start. Don't feel bad about asking a question. It's an ongoing webinar over there with Barry. And then the webinars this afternoon. Yesterday was canceled, unfortunately, but today, Wednesday and Thursday, we're going to have afternoon webinars. Friday support session is open to the general public on Friday running as well, except for the test drive week. We kind of overdubbed that with something different. But nonetheless, we're still there Monday through Thursday on the TI University schedule. The Monday and Tuesday classes are more beginning in nature, and the Wednesday, Thursday are more intermediate and advanced. So if you haven't been by those, again, you don't have to be a user. You can come by and use that as just a, is this for me type of exercise and see what it's all about. More information on our website in the help section on that one. All right, so it brings us to today. The reminder of the slide, no human is better than a machine, and no machine is better than a human with a machine. And what we mean by that is Trade Ideas technology works great with a human touch. It's not designed to just to be used in its by itself. It's designed to be used in conjunction with a human. And so humans with a machine together are the way of the future. It's the way AI is going to work going forward. It's the way technology will curate ideas for the human to discern what to work with. That's really what we're doing here, whether you're using the custom filters, your own, or whether you're using AI filters. That's the way it's going to be. So we'll get started with our formula. As I said, we like to talk about the market first, and wow, what a change of events from down here, as we were talking a whole different story with these moving averages pushing down on us, and we've blown through the blue sky. Nice consolidation back here, but we have not looked back, and this is about as strong as a chart will ever look to anybody right there. Your moving averages all fanned out nicely. The slope of the 200 I pointed out last week is extremely aggressive as well, because that's a big oil tanker to get to move to slope up like that. So we just kind of keep setting new highs. Intraday high again set today. I don't know if we close on a new high. It looks like pretty close. But there is absolutely no bear case to be made. I saw a Zero Hedge article where some stupid hedge fund is down 75% because they're just a doom and gloom doomsday fund. They don't pay attention to price action, because if they did, they wouldn't be short. They're just waiting for their black swan to come home and rescue them. Pretty dumb, because you want to pay attention to what the real story is, and that's the price action is adhering very nicely to the 10-period moving average. And if we even get too far ahead of it, well, there's too much space involved. We got to come back to it at some point. So the only thing to really look out for is if and when are we going to have a close below this 10-period moving average. If and when that happens, that will probably trigger a multi-day correction or something. But until that happens, we're just grinding higher into the holiday season. And there's just, again, there's absolutely no bear case to be made whatsoever. And if we look back, yeah, there's really nothing else to talk about. This is about as pretty as it gets these last 2 weeks here. Over on NASDAQ land, oops, in the technology space, same thing going on over there. Beautiful picture, perfect chart. Nothing to complain about here. Looks just like the others. And whoops. And more importantly, also numerous tests along the way, and still a lot of space in between this momentum line. So I just don't know what else to say other than if you're short, you got to check yourself as to why you're resisting what is. because what is the move, the market is moving higher, whether you like it or not. So I'll look at the Dow real quick. I haven't looked at that all day, actually. A little bit of a red candle. Actually, what would we call that, Andy? We would call that a engulfing candle. This could be interesting for tomorrow. I don't think we had any engulfing candles today, but we did in the Dow. What's that?
That is a good one. Yep, this sure is an engulfing
Didn't
candle.
see that. We didn't get that in the other ones. For some reason, your father's Oldsmobile, the old Dow Jones, decided to throw in a what we call a dark cloud cover, I guess is what you would call that. After a big rise in price, we went higher, and we also went lower, and we closed lower. We have a nice big red body engulfing yesterday's green body. This doesn't mean anything, but what it means is it could put up a red flag to keep an eye on future price action. Sometimes those little patterns there can be indicative of something to change. And that brings us to the double meaning IWM. I say double meaning because this is also the trade of the week. Spend a moment on this. I've said the same thing week after week. The fund managers out there that want to try and figure out how to make some separation between the benchmark moving averages and their fund, I should say, they're going to have to find where the alpha is. Where is the upside? And again, all-time highs. We still have a long way to go before the small cap, the Russell 2000, gets there. Now, everything, it just keeps creeping towards the scenario I've been pointing out. And 2 weeks ago, I mentioned I made a big adjustment in my 401k. I went heavily weighted in the small cap and mid cap because this, I think, is going to be the next area that's going to explode. And we'll zoom in a little bit more, and it's doing exactly what I thought it might do, or I hoped it might do, I would say. Let's get rid of these real quick. What I meant by that was we ran into this big level of resistance up here. And I said there's two things that happen when we hit resistance. We either pull back and correct in price, or we correct sideways in price. And the latter, correcting sideways in price, is the more bullish of the two, and it's what we would want to see if we are positioned. And, we are, because this is the trade of the week. And I think that this is it's just waiting for somebody to light the fuse, quite honestly. I really don't have a problem going on a limb and saying that. I think that we might wake up one day and see a big gap, and it doesn't look back. Now, what happens if we have that big day and the Russell 2000's up 4% or the IWM's up? If you're also watching some of the Holly trades, I would pay very close attention to any of the main segment trades known as Little Big Guy and Mighty Mouse, because they focus on the under $5 and under $10 stocks. So if we have a big move in the IWM and that explosion happens, that might be your cue to focus maybe not only on Holly, but your other scans as well. What are the scans coming through that are small caps? Because if the IWM is cranking, you really can't go wrong. I can't say that. You really have a much better prognosis for trying to ride the small individual names as a proxy. So that's a really, really long range, and the longer the range, the more momentum, the more strength. If it does break out of that range, because you've got everybody making bets for the last year, and half these people are going to be wrong at some point. And if the market is correct, it's going to find a way to drag this thing higher. Intraday, funny how it gave a lot back at the close. I don't know what that's all about, but in the bigger scheme of things, it gave us just a perfect little doji cross. So let's just bleed right into the trade of the week. This is the trade of the week, and we're not going to do a segment on Holly. Andy and I are going to kind of combine forces to do that one here in a few minutes. So if you got the trade of the week, there was no, I'm going to zoom in and I like to go back and show you what I was seeing. There we go. I think that's right. Yep. So there was no entry signal. The email said, jump on in. This range is not going to improve itself, and you don't want to miss it, so you might as well be positioned. You got to be in it to win it. So we had a nice close. I don't want to get too much caught up. Here's the freeze, Andy. I don't want to get too much caught up on the 10-period moving average. I know a lot of times I say, keep an eye on a closing price below the 10-period, but that's not gospel necessarily. In this case, it's just kind of hanging in the neighborhood. What I'm saying is I'm paying much more attention, God darn it, paying much more attention to consolidation Here we go. The consolidation of the price is what I'm much more interested in versus if it's on the top or the bottom of this moving average. The only time this moving average is going to come into play is when it takes off again. That's when it comes back into play. Right now, I don't use the 10-period moving average if I'm just recognizing this and considering this the sideways consolidation that we were looking for. Because remember, right above here is this giant wall of resistance that we haven't been able to break out of. So again, you got to be in it to win it. But going back on the weekend, again, there was really nothing more than the observations that we've had talking week after week about the IWM and the possibility of a nice breakout to the upside. And we would like to participate in that if it does happen. For those that are really adventurous, this is something I would do. You can play the ETF known as the TNA, not to be confused with TNA, but TNA is the ETF, and it's a triple. So if IWM runs 2%, you can bet the TNA is going to run, quick math, 6%. And it's a triple. And so if you have conviction like I do, and you really want to get the best bang for your buck, you can say, all right, I'm not going to play IWM. I'm just going to jump into TNA. And maybe some of you did that. But, you know, the webinar is called Trade of the Week, and this is the Trade of the Week. And we're pretty much just saying we're just waiting for the moment, and you got to be in it to win it. We're not waiting for a trigger. Just this is just one of those trades where it's not an individual stock, so I would be more likely to just say jump into an ETF because it's not an individual stock. Anything you want to add to the Trade of the Week selection, Andy?
No, I totally agree with you. We're actually in that in our little fund that we trade. So putting our money where our mouth is, and everything's setting up. Just boy, it's hard to be patient because it's been in this range for a long time, and I don't know. I just feel like one or two things going to happen. We're going to major pullback in the other averages, or this thing is going to go, and so we'll see what happens.
Andy and I have been trading side by side for over 20 years now. And do you recall, Andy, in those 20 years when we hit the upcoming Thanksgiving holiday and then the Christmas?
Oh yeah.
The market's in a good mood. Do you recall seeing small caps have some decent runs in the back in the day, or is that just me?
Yes. No. Yeah, you would. Well, all the averages seem to, but it did seem like the small cap, had their fair share of movement during that time. Mm-hmm.
Pedro asks, why is the IWM volume decreasing? I don't know why, but I can tell you this, Pedro. It's probably the indecision. I'm going to say it. Once we get this, and I hope we get it, but once we get that move, you're going to see that. I'm pretty sure. It will pick up. There's no reason right now. Everybody's just kind of placing their bets. And then when this breaks out, hopefully when it breaks out, shorts have to cover, the longs jump in, new positions are taken. That's when we'll start to get more volume.
Well, Pedro, we can probably pull up the SPYs right here, and you can see them as they hit all-time highs. The volume's not even there, really. I mean, it's just the way the market has been lately. Actually, the volume in the overall indices in stock market has come down dramatically over the last probably 10 years.
And typically, the way the market's been is the volume increases have always come on the pullbacks or the is this the big one, corrections, and then better heads prevail, and the market just keeps grinding higher on lower volume. It's kind of been the way it's been for a while.
Mm-hmm. I will add this, since we were talking about the diamonds and the cloud cover, it was because of Home Depot today. I forgot that when I saw that coming through my down ticker. It is a component of the Dow, so that is the reason why it definitely lagged today. Mm-hmm.
Yeah, not a good one. And I'll tell you what, if you're somebody who loves Home Depot and thought that it was on sale today, I got news for you. Andy and I have a rule: when you have bad earnings and a bad reaction to earnings, this is not over. And this could take a few more days to grind out, and I wouldn't be surprised if it comes down here and tests this in the next day or two. Mm-hmm. You can just see resistance, support. So I think it's already got a date with this level. I don't know how or when, but don't jump in and be the first person to buy on bad earnings, because think about it. You got people coming home from work tonight, they're logging into their E-Trade, and they're like, oh, really? I'm going to enter and put my market sell order tomorrow. So you got to squeeze those people out. And then the people that were on vacation, we got to squeeze them out, in a couple more days. So don't be the first person to grab the knife when you have a major shift in catalyst, meaning in this case, earnings weren't that great apparently. Maybe they were priced in, maybe they weren't. But don't be the first person to jump in on day one. Wait for day 3 or day 4.
Mm-hmm.
All right, so normally I might say hi to Andy and send it over there to look at the AI, but we're going to do it together today because in the email you saw, it said how to let your winners run, and that's going to be kind of the theme here for the next 10 minutes. Everybody's read it, everybody hears it. You got to cut your losers fast and you got to let your winners run. Well, that's so easy to say, but if you guys are out there trading real money and real emotions, that is much harder to do than you think it is. So I've got a couple of tips today to try and help with that. And I'm going to go back to, again, this is kind of our AI segment. I have only been paying attention to this for the last 2.5 weeks, our new module AI Neo. And if you're not aware, AI Neo is looking for trades that have high volume. Let's go ahead and click the first one randomly. Relative volume ended the day at 1.4, 4.2 relative volume, 5 relative volume. So this is where the action is. Where there's smoke, there's fire, and we want to play where the fire is. So I'm only paying attention to the Neo trade. So therefore, when you see up here, I've only got 4 strategies that I'm watching, 2 longs and 2 shorts. The breakdowns and the breakouts typically come in the first part of the day, after 5 minutes after the open, perhaps. And the pullbacks, short, and the bounce pullback, whatever you want, short and long, those start to come out maybe throughout the day, more sporadically throughout the day. But what I want to just do is kind of maybe tie everything together here, because what I am seeing for the first time, I shouldn't say the first time, what I'm seeing for the next level is a tremendous improvement on the AI for the reasons I just told you about. The method now is to look for where the action is, focus mainly on high volume. Give Holly the AI, the high volume stuff, and let her spit out, what's the good stuff, or Neo, I should be saying now, because this is the Neo segment. So how to let your winners run and how to cut your losers. Well, for those of you who have been following Neo and maybe paper trading, maybe auto paper trading, or maybe manually jumping into these trades, I mean, I can honestly tell you, since we've been watching this for 2.5 weeks, this is probably the single best tool for new traders that I've ever seen, because every single day in the last 2.5 weeks, this P&L graph has either been green or pretty much flat to not down at a much. And what I mean by that is this thing is not getting people in trouble. And the biggest hurdle for new traders is trade selection. It all starts from there. Where are you focusing your actions? Well, not only is the trade selection there, AI Holly, a Neo, of course, is giving you the entries. We'll talk about the exits in a minute, but this is proving to me, without a doubt, is a tremendous improvement and a new iteration on the AI and everything we hoped it would be. So if you're a new trader, just focus on the stuff that's coming out here, and we're going to go through them one by one, and we're going to talk about how to tend the garden. If you haven't heard, I've got a lovely analogy for this thing right here. Every day we get 1, 2, 3, roughly 10 trades or so. This is my little daily garden. All right. The AI Neo germinates them, and they start to trade. Some of them start red, go green, some go green, go red, but eventually they start to sort themselves out. Now, I've got this P&L set. If you don't know how to do that in a custom fashion, you go to Tools and Options. The AI trade size is set to not risk more than $100 on a trade should this trade stop out. All right, so let's go down here and look. We had 2 stop hits this morning, and what do you know? They were both about $100 loss. So right off the bat, the AI is helping you weed your garden. It's not really any more complicated than that. You really want to adhere to the stops that the AI is giving. If you're not adhering to those, then you're just kind of throwing all the rules and caution to the wind. But obviously, exit points are also very hard for people to come up with on their own. They get emotional and they keep redrawing the line and redrawing the line, maybe even doubling down at worst case possible. You never want to do that. But cutting your losers, the AI is doing that. It's showing you, it's slapping you right in the face to say, hey, you don't want this anymore. But how do we let our winners run? Because that really is the hardest part. When we are traders, and you guys that are trading real money and real emotions, you know what I'm going to say here. you see that trade get up to that really appetizing level where if you just hit that button, you're going to put a few $100s in your account. That's pretty cool. But the problem is you might be cutting yourself short of a few more $100 because you just wanted to book that trade and get rid of the anxiety and get out. That's the #1 culprit to preventing letting your winners run. And so what you've got to do is find an unemotional way to just kind of sit back and have a check off and say, should I still be in this trade? Should I still be in this trade? So as far as cutting the winners or cutting the losers, Holly's going to take care of the bad ones. But when do we want to get out of the good ones and say, okay, I'm going to go ahead and take my profit now? And that's where I think I can maybe help a little bit. So here's our garden. Here's today's garden. Today's garden, risking $100 per trade, was up 654 at the end of the day. And that's on moderate profit. What moderate profit means is the AI is getting us into the trade, which is exactly what we want because that's where all the value is. And then we take it from there. And so the moderate is open-ended. Conservative is letting the AI exit for you. So look at the AI was very conservative today. It got out too quick on a lot of trades. So even the AI needs help on letting the winners run. Whatever you think about aggressive, just forget about it because aggressive totals, those are not adhering to the stops. And we're not here to preach, don't adhere to your stops. We're here to talk about how to let your winners run and cut your losers early. So now what I want to do is kind of do a little exercise here. And let's start at the top. And let's go through these one by one and kind of see, or at the bigger intraday chart, the others if we want. But for the first trade there very early, it actually, it was a 5-minute candle, and the Michael says it satisfied everything. We usually don't see them trigger that early, but this one did. Nonetheless, I'll quickly look left. I see the daily chart is pretty darn good, and look at that sideways action with the 10-period movement come up. I don't think Neo could have really demonstrated in my world a much better looking chart today. Early, a nice pullback buy with beautiful daily options there. Now, when do we cut the trade? Well, this is where it gets kind of interesting. Again, you've heard me talk a lot about waiting for the candle to close on the other side of the momentum line, whether it's a daily chart or a 15-minute chart, to signify that the momentum is over. Well, it's going to signify that the momentum is over, that's for sure. But it still is up to you to determine, do you want to jump ship? Because I'm going to show you a couple of examples where that doesn't always hold true to gospel. For instance, this first one. All right, here was the sideways action. I would have loved to have seen easy price higher, but we didn't. We saw a doji above, and then we saw just a tick close below. Okay, well, I'm watching this for the moment. If we take out that low on the next candle, I'm probably going to want to get out, but we didn't. We held it, and then we held it again. Oh, we're back in the range again. So, you know, I don't have a cut and dry black and white way to tell you how to handle these situations. When the price action starts to bleed back into the moving average, it's up to you. Personally, I'd like to see a bit of a confirmation, maybe a double candle start to bleed back lower. Like if this one started to bleed lower, that would have been it for me. I'd have been out, but it didn't. So pretty much all day, look at that, pop back up. So where you want to get out of this one, I think we all understood that last candle of the day was the complete break of momentum. Now, consider this for a second. This is a nice looking daily chart. You know, what if you had 200 shares of this? What if you only sold 150 at the close or 130? And you kept that other 70 on the table. You know, yesterday we had a pretty good one that Neo called out called MDCO. Right, look at this entry, beautiful entry. All right, speaking of decision processes, yesterday there was no reason to get out. And if I said maybe sell a third or sell 2/3 and keep 1/3 overnight, look at what kind of rewards you can get when you have a chart that looks, you have a daily chart that looks like that. And what I mean by that was it closed on its highs, giant green candle, giant volume. You got to expect some follow through from something like this. Not all the charts on here are going to look like that, but when the ones that look like this, they can do so. So my point for DVA today, here comes the freeze, was I was just trying to show you that on the ones that are really nice winners, consider keeping another third, because you can really benefit on big gap ups the following day or follow through the following day. All right, let me wait for my system to catch up here. There we go. All right, so DVA, you know, your own discretion could be used midday. You could make a case that momentum was definitely broken, but was it falling back? No. Next trade was a short. So we got to turn our heads upside down, entering on the short. Here's the sell side entry right here. Down. Okay, so now we have another case here of this kind of wishy-washy price action. What I did like was that big wick right there. That signifies possible reversal. So I would have been okay there. Let's do this. This is always nice to do. There we go. So that wick is cool. And then we have this red one. Well, I'm watching this one closely. Oh, and it just closed below. What's the next candle going to do? The next candle is lower, and it's a doji. The next candle is lower, so they're basically just kind of hugging the other side of this silly moving average. So I didn't really see a clear example to get out and take profits on that one, and fell right back in line. So, again, this is the gray area. It's really hard once they close on the other side of that momentum line. It's really up to you to decide, is that it for stalled momentum, or should I hang around and see if it wants to maybe, hang in there? All right, again, we're trying to figure out how to weed the garden, how to let the winners run and keep the losers. And we're only predicating this on the one simple 10-period moving average. Here's another short. Down, here's our moving average coming down behind it. First test, easy, no decision process there. Sit on your hands and let that thing work for you. Decision process here coming up, nope, let it work for you. Then we had this guy right here. Well, I'll tell you what, I probably would have been the guy that got out at the top of that candle right there. That would have spooked me. So I can't sit here in hindsight and say, yeah, you can hang in with that one. They're all going to be subjective. If I go back right there, and that candle's on full green candle, yeah, I'd probably be getting out. So I'm just trying to say there's no one right or wrong way. We're just using that momentum line to determine where our decision points are. All right, we're moving down the line here of profitable trades. Again, there's the push, danced off that moving average a few times and closed below. I probably would have got out right here. I wouldn't lie to you. I probably would have said, that's it, I want out. But hey, it moved higher. No harm, no foul there. Next in line here on today's garden, Urban, another short. Well, in this one, it did do well by the end of the day, but honestly, I probably would have got spooked out, back here as well, because it was starting to really get back above that moving average. What I would have expected this one to do right there to drop, and if it didn't do that, I probably would have been out. So again, no harm, no foul. It continued on for the rest of the day. But the point here is we're going through individually one by one and looking at the decision processes. Another tricky one, Macy's. Nice short, bounce, fully expect that wick candle, I'd probably wait for that to close. And when it closed, it was so close to the line, I want to see what the next one does. But I would have liked to have seen a movement lower on that, but we didn't. However, it just kept hugging the other side of that line and then moved lower. So again, your discretion is there on how you want to handle those. Now we're starting to get into the trades that didn't work. All right. So this is another sell, and there's our sell point right there. And it never really worked. It just kept going higher and higher, and it tried, but it just never really could break away from this line. It never really could recapture the lower end of that line. So I mean, if I had been stubborn in this one, the moment I saw that, the rejection, I'd be out. If that had stayed red, I'd be happy. So again, I'm trying to highlight the moments of decision in these trades. Getting to the lower end here, down candle, not in the money very long, bounces right back up, and look at this, the AI stopped it out for us. There it is, stop hit. Just let the AI stop out. You can always get back in if you want, but typically I wouldn't. That's just me. Second to the last, here's the next stop out on the day, a trade that wasn't in the money very long, a quick reversal, and just let it stop out. And if you're on your game and you're watching, you can see that maybe we could have got out of this thing a little earlier with a little bit less if we were playing the game that I'm playing with you now, the decision point game. The moving average didn't keep a hold of it, and that was kind of a really sloppy one to begin with, quite honestly. And then lastly, down here at the bottom, this is a long that just didn't really go anywhere, and I think we can easily see once that candle closed that far below the momentum line, that trade was gone. Matter of fact, it actually reversed on us and hit the price lower. So just to kind of re-encapsulate here, if you're a newer trader, I would be focusing on NEO and only NEO. And focus, you can set, if you're doing paper trading in the Brokerage Plus, you can set your paper trade to the Brokerage Plus by coming in here and going to the Holly AI tab. What I would do, segment, I would just turn these four on. Oops, we use the enable button down below. And let that be your basket of trades for the day. That's where the action is, and it's not been leading people astray, I can tell you that. So once you're in them, watch them throughout the day. Recognize your impulse to want to sell the ones that are working well. Typically that doesn't happen in paper trading mode. It only happens in real money mode because it's a whole different ballgame. But big takeaway here, guys, use this moving average. Use this moving average to show you when to stay in a trade and when to not be in a trade, when the momentum's broken. This is probably the best example we have all day. Aside from Medco yesterday, no reason at all to get out of the NEO trade yesterday over here. Bing, 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 all day long. Want to add something?
Yeah, a couple of things. First of all, guys, remember these trades are designed to basically be all-day holds. And like Steve was just mentioning to you, Home Depot, don't be the guy. These things could have 2 or 3 days worth of sell-off. Don't be the guy that wants to jump in right now and buy. Well, take a look at Macy's. So, and I know how a lot of people, everybody goes through this as a day trader, and when you're trying to pick bottoms on these stocks that are down 15, 10%, whatever, and trust me, you're going to end up losing a lot of money because it's a very hard. I mean, look at Macy's right there. You really had one opportunity to make a long trade there, and it lasted about 15 minutes, and it was done. And so the point I'm making is not only can these things be all day trades, they can be 2 or 3 day trades. Okay, if you look at them, moves, counter moves, midday, most of them went back and traded closed near lows. That's the weakness, human behavior of a stock that did not beat earnings, and they're just getting killed. People are selling all day long, and a lot of times they can have some follow through. As Steve's pointing out right there, I wouldn't be surprised to see Macy's go down to that swing exit you see there on our chart.
I was just going to say that. Yep. As I was talking about in Medco and follow through, keeping a third of your position on stocks that have giant green candles and expect some follow through. Well, this was a gift. You don't expect that, but we'll take it. The same thing happens on the downside. A beautiful red candle closing on lows, giant volume. We got to think there's going to be some follow through, and I would bet, like Andy said, it's already lined up for us. The trade ideas, swing exit is already staring you in the face. You might be able to let another third of this type of a trade overnight, play with the house's money, and then take a nice scalp, and take a nice position profit midday the next day, because a whole other theory that we have and talk about all the time, Andy and I, is the day and a half theory. Momentum is day one, full momentum, follow through day two, and then everybody starts to look at the exits and see who's going to run first. That seems to be the time frame of the attention span for profit taking.
And one other point, Steve, I want to make, if you'll pull up KRNT and take a look at the daily, and this is what may have kept me away from this trade. Look at yesterday. You had, and I bet the earnings were pre-market yesterday. I'm not seeing them on your screen, but
18th, yeah, post. That was post.
Okay, but it did have a pretty big sell-off. I'm not sure why it did yesterday, but a lot of the sellers probably got out. I don't know if insiders leaked some information or what, but it had a pretty big sell-off yesterday, so anytime I see a bar previous, unlike the other ones like Macy's, you can see all the action was on today. But anyway,
what was I going to say? I lost my train of thought. Yes. No, call.
Pedro has a question there.
Yeah, it was Pedro's question. Thank you.
Yeah.
Pedro, moderate profit is letting the AI enter for you, and you make your own exits, meaning this is going to adjust all the way to the close. When the closing bell rang, that was the value. Aggressive, basically, you're not adhering the stops. The aggressive is not, it's not going to stop at $99 or $100 where my setting is. If the trade keeps going against me, it's going to keep going, and it's going to calculate that. So that's the difference. Aggressive, I would say, if you're not adhering to a stops, you're an aggressive trader. So that's why it's named as such. All right, so I'm going to move on now. I'm going to set a few alerts, and we'll save a little bit of time for Q&A. But it did remind me that we have that contest this week that we usually run, and this will be the last time, hopefully, that we use the price alerts for the test drive contest, because next test drive in a few months, hopefully, we'll have the Brokerage Plus paper trading gamified on the back end, so people can have a more realistic way of competing in that particular way. But for now, we'll continue to do the trade price alerts. And I'm going to set a few alerts, and when I get to the end, I'll show the people who are thinking about entering that contest just the easy steps to make sure that you deliver us a nice, clean cloud link. Because a lot of times when we judge these on the close on Friday, the cloud links are corrupted or they just weren't done right. And it's unfortunate because we have to immediately disqualify that person. So we want to make sure everybody gets a good shot. Now, before I go through, I had a few ideas, but a few of them got kind of spanked at the close. There was some goofy stuff happening at the close in some of these things, a lot of selling. But I'm just going to go through these three scans. I brought up Andy's bull flag scan, which had about 10 of them in there earlier, but when the market closed, we only had a couple. Interesting. So I'm just going to go through these one by one and see if there's something that I like. I know I liked that one, and I'm going to do it again. I like the little spike lower, and we kind of regained the 10-period moving average here for the most part. I'll keep this one in mind, and we use yesterday's high as a price alert. I'm just going to go ahead and click OK. There's that one. I'm going to adjust this just a skosh. There we go. The next one is Momo. Big sell-off on the open, and it didn't really get much back on the close, but I'm going to still pop it in there regardless, just to see if it does want to get back above today's highs. We will be alerted. But I don't like the fact that it closed below, but it's done it a couple times before. This one actually took a position in today on our other account. Had a nice movement, but gave a lot back at the close. I don't really like the way it closed. But nonetheless, I'm going to keep an eye on this one too. We'll mark this one up for our. Now, what these three that I brought off here are just simple alerts that I get in the morning when the selling occurs pretty heavily on a really decent chart. Otherwise, these charts are, for the most part, going to look good. But for a moment in time, we had a brief sell-off in the morning. So that was my cue to see that one. Let's go to the next scan here. This is Carnival Cruise Line, and this one's having a real tough time at the 50. I'm gonna pass on that. I'm not liking that downtrend at all. This one is not looking at nice daily charts. It's looking at more for charts that are trying to break their downtrend. INFY did 12 million shares today. Infosys. I'm still hanging in. I'm still curious about this one. 4 days of sideways action on that moving average. I'm interested. So if it breaks above that high, we'll know about it. What else do we have? CCL, we're not interested in. And then lastly, Ulta. Nope, that one gave away at the close. So down to our last scan here. I think we're going to like a few of these. Decent wick yesterday, but reversal wick today. It's just not going anywhere. It's kind of like the IWM trade as far as I'm concerned here, but I still find it interesting. And we use the high from a couple days ago. That looks good. This is called the bull flag setup. This is something that Andy created. This one I probably like the most of all, and you can see why. The beautiful moving averages, just not even wanting to touch the dang thing. The thing just wants to run. This is like a dog at the dog park. It just wants to go. 2301, we'll go 2302. We'll actually mark this one up after it unfreezes. Come on. Lately my program has been freezing. It's kind of a mystery. We're trying to figure it out. All I mean O2, not 2.
Easterly Government Properties.
The REITs have been doing well. Last but not least, NTRS. I'll take this one too. This one's looking pretty decent. Seems to have little tiny days, little baby steps. Maybe it'll little baby steps. But maybe it'll have its day in the sun. I'm going to go back to this high back here, 107.93. We'll call it. Come on, man.
Again?
Yeah, this is getting really old. All right, so now I've got 5 or 6 price alerts set. So those of you who are going to enter the contest, pay attention. The rules say that you cannot submit more than 5, so make sure you do not have more than 5 of them. Highlight those 5, even though I have 7, and you want to share those price alerts. Copy, and then you paste into the actual contest form that you guys should have. So with that said, I'm going to drop in today's price alerts into the chat window, and I'm going to remind people that are taking the contest, there's a few rules. The trades have to trigger on Thursday. They can trigger, pre-market, but nothing can trigger Wednesday regular session or aftermarket. So you're best off probably waiting for tomorrow's Wednesday aftermarket session to close, then submit your cloud links, because we have to reverse engineer these, and if they trigger it on a Wednesday aftermarket, we'll have to disqualify you. All right, so there are the price alerts, and that is it for today. I'm going to save a few minutes here if you guys need it for the test drivers. If there's any queue or any questions, we can go to a Q&A here and demonstrate something, but I got to tell you, we've been having so many webinars and so many opportunities for people to come in and get their questions answered. I'd be surprised if there's a lot, but nonetheless, we'll wait and see if you guys have any. You're welcome, Waleed, for the price alerts. I forgot to look at last week's. They really didn't do that well. Could you drop the burn scan? Yes, I can do that for Waleed and whoever else wants it. Again, this is the one that looks for reversal, trend reversal, basing patterns, and moving side in the chat window for those who want it. All right, well, if we don't have any other questions, we'll go ahead and bring in Scott. There's going to be some interesting promos coming up, and I think Scott might touch on that, but let's bring that slide up and bring Scott back. Thank you all for your attention today.
Yeah, thanks everyone. Thanks everyone that's in the test drive. If you still want to get into the test drive, you can still sign up through tomorrow night. Do it now, and then you'll be ready for Wednesday, Thursday, and Friday. Try out all the features. Try out the paper trading. Check out the back testing, all the goodies, the AI. You can paper trade with the AI. It's kind of fun stuff. Just go to trade-ideas.com/test drive if you want to sign up. We've got a series of ebooks. You should all have a copy. It's free. Trade-ideas.com/setup. There's 2 chapters per book, 3 books. They're organized by theme, and they include cloud links to some of the strategies that are discussed. You can add that to your layout. Both Steve and Andy contributed chapters, so check those out. We've got a podcast that comes out just about every week on Fridays, so get ready for that by subscribing. Just search for Trade Ideas Podcast in whatever app you listen to them in, and add us, and then you can check out some interviews in the back issues. And then we should have a new one out in a couple of days on Friday. There's a code that's good this month, Trade Turkey. If you're ready to sign up for premium right now, or upgrade from standard to premium, or just sign up for standard, Trade Turkey saves 15% off the first month or year of any subscription. So check that out. We're also in the middle of the test drive, so write that down, and once the test drive expires, use it. You can follow Steve Gomez on Twitter at TodayTrader. Also follow at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook page to like and share what we post with your friends. Info@TradeIdeas.com is the best place to send your questions. It goes into our help desk software. We're going to have this recording up later on tonight or tomorrow morning, so stay tuned for a notification about that once it's available. And thanks, everyone. Enjoy the rest of the test drive, test drivers. Steve, Andy, have a good one.
See you next time. Thanks.
Thanks, everybody. I will see you Thursday. Bye-bye.